Hello, everyone. My name is Yaman, and I provide daily updates on Tesla, markets, and technology. Let's get started. Markets were positive. They're about to turn negative. Russell 2000 is down 0.5%. S&P 500 and Nasdaq are flat. Let's look at our heat map. Microsoft, Nvidia, and Broadcom are pulling the markets, and Oracle is up 15% today. Technology firms are generally higher. Tesla is flat. Amazon, Apple are flat. Google is down 0.4%. Financials are down, and energy stocks are up because oil prices are going up. We're going to go into that in a little bit. Let's start with our daily article. Wall Street dips as Middle East tensions rise. Boeing drops. If you have any questions along the way, please leave a comment. Ask your question. You can do it live or after the video is over, and I answer all questions. Wall Street's main indices slipped on Thursday as signs of rising tensions in the Middle East hurt risk sentiment, and investors sought more clarity on Washington's recent trade deals with China. Boeing declined 5% after an Air India Dreamliner jet crashed minutes after taking off in India's western city, killing more than 200 people. Underscoring increased volatility in the Middle East, President Trump said on Wednesday, U.S. personnel were moved out of the region as it could be a dangerous place, and U.S. would not allow Iran to have a nuclear weapon. We're going to dig into that topic later on in this live stream. The clearing out our embassies in the Middle East of non-essential employees sends a signal that we're anticipating some turbulent times, said Kim Forrest, Chief Investment Officer at Bokeh Capital Partners. A senior Iranian official said on Wednesday Tehran will strike U.S. bases in the region if nuclear negotiations fail and conflict arises. China on Thursday affirmed a trade deal with the U.S., saying both sides needed to abide by the consensus. 5 of the 11 major S&P 500 subsectors fell. U.S.-listed shares of gold miners also advanced. After a tame consumer price report Wednesday, softly expected producer price data and largely unchanged initial job claims. We're going to dig into those later as well. But let's start with a Tesla article today. Elon Musk's robotaxi launch in Texas tests its vision of Tesla's future. Tesla faced an existential test this month as it aims to launch self-driving robotaxis in its home base of Austin, Texas, where public safety officials are increasingly concerned about the state's anti-regulation stance toward autonomous vehicles. For Tesla, the launch of between 10 to 20 Model Y vehicles follows a decade of unfulfilled promises of self-driving vehicles from CEO Elon Musk, who last year staked the company's future on such technology as it pivoted away from chasing rapid growth in EV sales. The Austin robotaxi launch, which Musk says will tentatively open to the public on June 22, comes as Tesla tries to arrest a global vehicle sales slide, stemming from both its aging lineup of human-driven electric vehicles and Musk's right-wing political activities. By the way, I expect a 20% drop year over year in Tesla deliveries in Q2. Last year, Tesla delivered 444,000 vehicles in Q2, and I think this year is going to be closer to 350,000, if not lower. Some analysts and investors attribute the majority of Tesla's stock market value to hopes for robotaxis and humanoid robots, as it has yet to deliver. On an earnings call last year, Musk said investors should sell their Tesla stock if they did not believe the company would solve the technological challenges of driverless vehicles. For the city of Austin, Tesla's launch adds anxiety to a regulation-free landscape for autonomous vehicles. The Texas legislature in 2017 prohibited cities from regulating autonomous vehicles as a way to promote the industry's growth statewide. Now, as vehicles proliferate, some politicians, public safety officials, and advocates are pushing for more rules. Austin police officers continually have run into problems with autonomous vehicles, from Alphabet's Waymo and GM's now defunct Cruise freezing up when they encounter complex traffic situations, such as festivals where officers direct traffic with hand signals, said Austin Police Lieutenant William White. Vehicles have disregarded the traffic barriers and driven into prohibited areas, he said. It's been very frustrating on our end from a safety standpoint, said White, who oversees autonomous vehicle safety for the department. If these machines are learning, they're not learning at a quick enough pace for sure. Waymo said it works closely with Austin officials and is always looking to improve the technology. The Texas legislature passed a bill last month that, for the first time, would require autonomous vehicle companies to apply for authorization to operate in the state and give state authorities the power to revoke permits if a driverless vehicle endangers the public. Firms are also required to provide the state information on how police and first responders can deal with the vehicles in emergency situations. If the bill is signed by the governor, it is unclear when the new system would take effect, but likely not until next year, according to a state Department of Motor Vehicles spokesperson. Musk and Tesla have given few details about their plans for the Austin robotaxi launch. Among the key questions is whether the cars will include new sensors or other technology that differs from the currently offered FSD feature, which is not autonomous. In a post of his X social media platform on Tuesday, Musk described the driverless Austin vehicles as unmodified Tesla cars using a new version of software. In January, Musk said Tesla would be offering autonomous ride hailing for money in Austin in June, followed by other American cities as swiftly as possible. He has described Tesla's approach as one that works anywhere. In April, he said the Austin rollout would begin with 10 to 20 mile wide vehicles and that the company would scale up rapidly after that to be in many other cities in the US by the end of the year. He predicted there would be millions of Teslas operating fully autonomously by the second half of next year. I don't think either of those things will happen. Musk's statements in recent weeks have been more cautious. On CNBC, there you go. On CNBC last month, he said that when Tesla deploys robotaxis in Austin, the company will geofence the vehicles and operate in only the parts of Austin that we consider to be the safest. He said the company's staff would remotely monitor the vehicles. We're going to be extremely paranoid about the deployment, as we should be, he said. Musk and Tesla have not said who the passengers will be, how Tesla will charge for rides, where in Austin they will operate, or how extensive the remote operation will be. Rivals have started testing with their own employees and a limited number of passengers before opening the service to anyone. In a post on X on Tuesday night, Musk said public rides would begin tentatively June 22, adding the date could shift. It will. One video that surfaced on social media on Tuesday, which Musk reposted, showed a Model Y with the word robotaxi driven on a street on Austin with no human driver, followed closely by a second Tesla vehicle. In a May 28 post on X, Musk said the company had recently started testing self-driving vehicles on Austin public streets with no one in the driver's seat. Tesla did not respond to a request for comment. Tesla advertisements for teleoperation positions say the company needs the ability to access and control autonomous vehicles and humanoid robots remotely, adding that such employees can remotely perform complex and intricate tasks. The NHTSA inquired last month about many of the unanswered questions surrounding the Austin rollout. The agency said which is investigating Tesla's FSD driver assistant feature after a fatal crash in 2023, sent a detailed request seeking information about safety features, Tesla's timetable for expansion, where exactly it will be operating the vehicles, and how it is preparing for accidents and emergency scenarios. The responses are due next week. A person familiar with the NHTSA's operation said the agency sent the letter because it already has concerns about Tesla's current FSD technology, which it sells to customers for $99 a month, and it fears that Tesla's Austin rollout may not be safe. The Texas Attorney General is considering a Reuters request for communications between Tesla and city officials in Austin over the past 2 years, which Tesla has opposed over trade secret concerns. Austin's Department of Transportation and Public Works declined to discuss Tesla's operations. A person familiar with Austin's autonomous vehicle policies said the city has been meeting regularly with Tesla since December and that the company has shared some deployments plans with the city. Safety experts say there have been a dearth of information about Tesla's technology. Phil Koopman, a Carnegie Mellon University engineering professor and autonomous vehicle safety expert, said Musk's statements, quote, leave room for ambiguity, end quote, about its plans in Austin and the sophistication of its robotaxi technology. Quote, when you start to pin it down, it's like Jell-O, end quote, he said. He questioned whether Tesla would be ready for a rapid nationwide rollout soon. Having 10 cars on the road and not having a crash, Koopman said, is sort of the table stakes for this game. I thought this was a very comprehensive, fair article, so I want to share with you all before we move on to other news. US producer prices rebound less than expected in May. US producer price increased less than expected in May, restrained by lower costs for services like airfares. The producer price index for final demand rebounded 0.1% last month after a revised 0.2% decline in April, Labor Department's Bureau of Labor Statistics said on Thursday. Economists polled by Reuters had forecast the PPI rising 0.2% after a previously reported 0.5% drop in April. In the 12 months, though, through May, the PPI advanced 2.6% after rising 2.5% in April. So similar to the CPI report, we actually saw an uptick in May than April. And this is on both on CPI and PPI. And so the inflation is still running around 2.5 to 3%. So it's unlikely that the Fed will cut rates despite some further weakening that we're about to discuss in the employment report next week. Data on Wednesday showed consumer prices increased marginally in May, curbed by cheaper gasoline and airline fares amid cooling demand. And that's changing too. Now, before we move on to other news, Nick Timmeros, this is the chief economics correspondent of the Wall Street Journal. Why isn't the CPI moving higher? A few candid explanations on Wednesday. The economy just isn't strong enough to allow businesses to pass through import price increases of a magnitude that's meaningful. This has been my working theory for the last several months. And I think this is still the leading reason why inflation isn't surging as quickly and as much as people expected. But I think this will change in June, and unless we go into a recession, which is also possible. But the other one is lower energy prices could be offset, which I'm going to show you that's changing in June as well. And he says, just be patient. Third theory, just be patient, which is also, we discussed this before as well. It will take more time. Tariff rates have been in flux, and anticipatory inventory stocking allowed companies to have a longer runway to adjust prices. So we've actually, in the PPI report, if you dig into the details, we have seen a couple of the categories starting to show some effects. So like I said earlier, before in previous episodes, May would show some impact, but the majority of the impact of tariffs on the inflation report is going to come in June. Okay. And that's throughout Q3. Now, one thing that's going to change that in June is oil prices. You can see in this graph that through May, oil prices were close to $60 per barrel. This is crude oil, WTI, close to $60 per barrel. But as of the first week of June, they've gone from $60 to $69 per barrel. Okay, now they're kind of around 68, 69. So that's a 15% increase in first half of June. And that's not going to be good for June inflation reports. They're going to be announced second week of July. And I think that's going to be a major problem for the Fed. And I think this is going to be highlighted by the Fed chair next week. Any questions, comments about these topics? Leave a comment in the live chat or below the video after the live stream is over. Now, let's move on to another thing. What's driving oil prices right now? Rising geopolitical tensions in the Middle East. The U.S. to pull some personnel from the Middle East amid rising tensions with Iran. U.S. President Trump said on Wednesday, U.S. personnel were being moved out of the Middle East because it could be a dangerous place, adding that the U.S. would not allow Iran to have a nuclear weapon. Reuters reported earlier on Wednesday that the U.S. is preparing a partial evacuation of its Iraqi embassy and will allow military dependents to leave locations around the Middle East due to heightened security risks in the region, according to U.S. and Iraqi sources. The 4 U.S. and 2 Iraqi sources did not say what security risks had prompted the decision, and reports of the potential evacuation pushed up oil prices by more than 4%. A U.S. official said State Department had authorized voluntary departures from Bahrain and Kuwait. The State Department updated its worldwide travel advisory on Wednesday evening to reflect the latest U.S. posture. Quote, on June 11, the Department of State ordered the departure of non-emergency U.S. government personnel due to the heightened regional tensions, and quote, the advisor said. The decision by the U.S. to evacuate some personnel comes at a volatile moment in the region. Trump's efforts to reach a nuclear deal with Iran appear to be deadlocked, and US intelligence indicates that Israel has been making preparations for a strike against Iran's nuclear facilities. They are being moved out because it could be a dangerous place, and we'll see what happens, Trump told reporters. We're given notice to move out. Asked whether anything can be done to lower the temperature in the region, Trump said they can't have a nuclear weapon. Very simple. They can't have a nuclear weapon. Trump has repeatedly threatened to strike Iran if stuttering talks over its nuclear program fail, and in an interview released earlier on Wednesday said he was growing less confident that Tehran would agree to stop enriching uranium, a key American demand. Iranian Defense Minister Aziz Nasir-Zadeh also said on Wednesday that if Iran was subjected to strikes, it would retaliate by hitting US bases in the region. The US Embassy in Kuwait said in a statement on Wednesday that it had not changed its staffing posture and remains fully operational. The US has a military presence across the major oil producing region, with bases in Iraq, Kuwait, Qatar, Bahrain, and the UAE. US Defense Secretary Pete Hegseth has authorized the voluntary departure of military dependents from locations across the Middle East, a US official said. Another US official said that it was mostly relevant to family members located in Bahrain, where the bulk of them are based. The State Department is set to have ordered departure for the US Embassy in Baghdad. The intent is to do it through commercial means, but the US military is standing by if help is requested, a third official said. Iraq's state news agency cited a government source as saying Baghdad had not recorded any security indication that called for an evacuation. Another US official said that there was no change in operations at Al Udeid Air Base in Qatar, the largest US military base in the Middle East, and that no evacuation order had been issued for employees or families linked to the US Embassy in Qatar, which is operating as usual. Oil futures climbed, as we discussed. Earlier on Wednesday, Britain's maritime agency warned that increased tensions in the Middle East may lead to an escalation in military activity that could impact shipping in critical waterways. It advised vessels to use caution while traveling through the Gulf of Oman, and the Straits of Hormuz, which all border Iran. Britain's Foreign Office said that it was monitoring the situation and would keep its embassy in Iraq under constant review following the US moves. Iraq, a rare regional partner of the both US and its arch regional foe, Iran, hosts 2,500 US troops, although Tehran-backed armed factions are linked to its US security forces. All right, this is a long article. Let's move on. I want to focus on the labor market as well. We had some news today. Initial claims were also higher, 248,000, but continued claims were even higher. So I think there's some important news going on here. US labor market loses steam. May producer inflation comes in tame. The number of Americans filling new applications for unemployment benefits held at an 8-month high last week, consistent with easing labor market conditions, while slowing domestic demand helped to restrain producer prices in May. I'm going to dig into the labor market data here. The data was released a day after the Labor Department reported a moderate rise in consumer prices. Surveys, including US Central Bank, have suggested higher prices are coming. Okay. Initial claims for the state unemployment benefits held steady, but claims could remain elevated with the school year ending this month, as some states allow non-teaching staff to collect benefits during the summer holidays. So if the new graduates can't find jobs, which job finding rate is pretty low these days, it's actually almost recessionary levels. I think this alone could lead to initial claims and continued claims rise, all else equal, in the coming weeks. So there have been no widespread layoffs as employers hoard workers in an uncertain economic environment. The labor market is losing steam. An immigration crackdown by the White House is also slowing employment gains. Non-farm payrolls increased by 139,000 jobs in May, down from 193,000 a year ago. A lagging measure of employment, the quarterly Census of Employment and Wages, has suggested a much slower pace of job growth between April 2024 and December 2024 than reported in the survey of establishments from which the non-farm payroll data is compiled. Economists said that part reflected reduced labor supply because of the immigration restrictions imposed by former President Joe Biden's administration in mid-2024. The labor pool could continue to decline as the Trump White House ramps up deportations. See, I don't think this part is very material um, for now because of all the, you know, issues that the administration is running into deporting people. I think that new graduates could drive up the unemployment rate. I think that's a big one. And I think the hiring rate is still low, and I think it's actually going lower as opposed to bouncing back along with the stock market. So if hiring rate continues to go lower in June and July, as I suspect, then I think the unemployment rate is going to rise pretty rapidly. But that's just a forecast. We'll see what happens. I'm monitoring this very closely, and so is a lot of market participants, both in the bond market and the stock market. Ease in labor market conditions were reinforced by the claims report, which also showed the number of people receiving benefits after an initial week of aid, a proxy for hiring, increased 54,000 to a seasonally adjusted 1.96 million during the week ending May 31, the highest level since November 2021. Okay. So this was, the other thing is in November 2021, this figure was coming down pretty rapidly, and now it's going up pretty rapidly. So this is something to watch right here. Recently, laid off workers are struggling to find work. We talked about the inflation numbers already, so we're going to move on from that. I want to focus on this continuing jobless claims thing. This is really the key critical part here. I think this is the critical news that came out this week. Continuing claim, I think that should be continued, but continuing jobless claims reach highest levels since November 2021. Initial claims hover at 8-month high. Weekly claims for unemployment benefits remained at their highest level in 8 months during the first full week of June, while the number of Americans filing for unemployment insurance on an ongoing basis reached the highest level since November 2021. Data from Department of Labor released Thursday morning showed 248,000 initial claims were filed in the week ending June 7th, flat from the week prior and above economists' expectations of 242,000. Meanwhile, 1.956 million continued claims were filed, up from 1.902 million. Okay, so that's quite a jump in 1 week. All right. Economists see an increase in continuing claims as a sign that those out of work are taking longer to find new jobs. So this translates to consumer sentiment down the line, which translates to sales of companies and then margins, etc. So this could be the first domino to fall that translates into a recession in the coming months. All right. I also heard a new theory by Dan Niles, who says something like, because there was pull forward of imports and consumption in March and April, and he's very much convinced that there was a major pull forward, we're going to see a special weakness between Thanksgiving and Christmas time. All right, so if you bought your car, or appliances in March and April, then you're unlikely to be in the market again this year. So he expects in the second half of this year to be an economic weakness. And I think that theory makes sense. Continuing jobless claims keep rising to fresh highs. Renaissance macro head of economics Neil Dutta wrote in a note to clients on Thursday morning, this means unemployment is going up. I agree. Initial claims have perked up, but remain tame by comparison. Taken at face value, it implies that rates of hiring have declined, even if rates of firing have not materially increased. Other recent data has shown signs of a slowly cooling labor market as hiring slows. We talked about that already. I think this is an underrated data point right here. ADP data show the private sector added 37,000 jobs in May, because that's almost break even, and it's much lower than the establishment report, what the establishment report showed, what the BLS showed. But this, I think this is going to be the one that gets revised now pretty significantly. The labor data combined with recent inflation reports have shown price increases cooling, has heated up debate on whether the Fed may cut interest rates next. I mean, this part is kind of like, how can they cut rates if geopolitical concerns lead to 15% increase in oil prices? Okay, the housing market is still relatively tight. It's still not in balance. And And on top of that, you have tariffs starting to work themselves into the data as of June. So I think the Fed will, next week, I think the Fed chair is going to reiterate that they want to stay pat and they're not going to be cutting. But on the other hand, the market participants are pricing in a near 100% probability of rate cut in July. So I think that's coming to a head. Traders are now betting that there's a 25% chance the Fed cuts rates at least once by the end of July meeting, up from a 19% chance seen a day ago. I don't think that's correct, but I'll check. Let's do it live. Let's check right now. Okay, so June expected to be a pause, and then July 25% probability of a cut. 75. Okay, so I stand corrected. Then I stand corrected. I apologize. 25% probability of a cut in July. 75% probability of a pause in July. Okay, and then September is looking more like the first cut priced into the markets. 25% expect a pause, 58% probability of a one cut by September meeting, and 16% probability of two cuts by September meeting. And then this year, markets expect, this is the pause, this is the pause. So they expect in median 2 and shifting to 3 cuts. Interesting. So I think this must have shifted a little bit after today's continued claims. So you can see the yesterday's data. So 3-4% have shifted from 1 cut to 3 cuts. Interesting. Okay, let's go back to this article. Data said because uncertainty is high and the Fed is waiting, the scale of policy mistake could be that much larger if inflation fails to turn up the way they assume. All right. Now, what is Trump doing about the Fed? Trump says he won't fire Fed's Powell, but may have to force something on rates. Running over today, I'm sorry, I apologize, but I think this is all good information. So, US President Donald Trump on Thursday said he would not fire Fed Chair Jerome Powell, adding that he may have to force something as part of his ongoing push for the central bank to lower rates. Raise your rates, you don't have to keep them up here. If it's going up, I'm okay with you raising, but it's down and we're going out to financing and I may have to force something, he said at the White House. I'm not sure what that means, but Trump last week said that a decision on the next Fed chair would come very soon. Speaking at the White House on Thursday, Trump slammed the Fed chair over the lack of rate cuts, calling him a numbskull by adding, I'm not going to fire him. Trump also said he was unhappy about rising oil prices. Okay. I don't think oil price care about your emotions. The Trump administration is offering 3 different scenarios for how Liberation Day 2 may play out. A key deadline in President Trump's trade war is getting closer, with a 90-day pause on his Liberation Day tariff set to expire on July 9. But what will actually happen when the clock strikes midnight on what some are calling Liberation Day 2.0 is anyone's guess. A series of comments from Trump and his officials this week, even within a 12-hour span on Wednesday, were notable for the variety of scenarios they have on the table. It could be a non-event with additional deadline extensions in the offing. It might be a day of celebration of long-promised trade deals that have yet to materialize. And it could also be a day when the hammer comes down and tariffs are simply dictated. Trump himself has indicated that he's open to all 3, telling reporters on Wednesday evening that he will be sending letters to tell nations, quote, this is the deal, you can take it or leave it, end quote. No one believes you anymore. No one believes you anymore, Mr. Taco. But also acknowledging that some deadlines could be extended and on other fronts we're rocking in terms of deals. The scenarios laid out this week by the President, Treasury Secretary Scott Bessent, and Commerce Secretary Howard Lutnick aren't necessarily mutually exclusive, but which countries get which outcome will be closely watched by investors, as some outcomes are decidedly more market-friendly than others. As for what will actually happen, Henrietta Trays of Veda Partners offered a prediction in a Thursday morning note to Yahoo Finance suggesting combination of all 3. I think this is going to be like a potluck. There's going to be a little bit of everything, she said. On the menu for about 130 nations will be letters, she suggested, and I'm optimistic their rate will be in the 10 to 25% range. Other nations may be able to secure limited deals, such as a recent pact with the UK, but with plenty of tariffs staying on or being added. Others may get an extension from now. Three seemingly different messages in one day. The uncertainty facing markets resolves around which scenario takes center stage in the coming weeks. The divergences were in stark relief Wednesday as they unfolded. In the morning, during a CNBC appearance, Lutnick suggested that the centerpiece would be a flood of new deals. He said that with China tensions on the back burner for the moment, negotiators will be able to find areas of agreement on other fronts. You're going to see deal after deal, he said. This is going to start coming next week and the week after and the week after. Okay. Now, in the final news of the day, GameStop stock plummets as company announces $1.75 billion of debt offering amid Bitcoin push. GameStop stock plummeted as much as 19% in the early trading Thursday after the video game seller announced that it intends to sell $1.75 billion worth of convertible bonds. In other words, GameStop is raising cash from investors by issuing debt in the form of convertible senior notes. Investors will convert the notes into GameStop equity before or when they mature in 2032, diluting shares and potentially weighing on the stock's value. GameStop said it would use the proceeds of the latest convertible bond sale from the investments and potential acquisitions. In May, the company announced a $500 million purchase of Bitcoin. Thursday's announcement follows another big debt offering, with the company selling $1.3 billion of convertible bonds in March. GameStop is a meme stock known for its unprecedented rally in 2021, driven by retail traders we all know what GameStop is. All right. Smaller, low-growth companies such as GameStop have been following in the footsteps of Michael Saylor's software firm Strategy, formerly known as MicroStrategy, using a combination of debt and equity to add Bitcoin to their balance sheet in the hopes of replicating its stock price success. But investors are wary of such bets because Bitcoin can be volatile. The main risk of running a leveraged Bitcoin treasury strategy is that a rapid drop in the price of Bitcoin would lead to a possibility of bankruptcy. NYU Stern School of Business professor David Yermark told Yahoo Finance earlier this month. Indeed, GameStop announcement of its Bitcoin investment in May sent shares down 10% in one day. GameStop's revenue has fallen every year since 2023 as video gamers opt for digital game purchases rather than visiting its stores. On Tuesday, the company reported first quarter revenue falling 6% from the prior year to $748 million, sending stock down 5% the following day. On that note, thank you very much, everybody, and I will chat with you all next time. Take care.